Knowing how to read the candlesticks helps you understand the market, take more accurate trades and easily avoid many losses, because every single candle in the market tells you a whole story. So I'm going to take you through the 3 types of candlesticks in the market. Of course, I'm going to learn you exactly how to spot them in the market, because they are going to be different shapes and sizes. And of course, let me tell you what they are. First candle is the strong candlestick, second candle is rejection candlestick, and the third candle is the weak candlestick. So let's just start with the strong one. So just before we start with the strong candlestick, if you want to skip all the hard work and get mentored by me one-on-one, check the description. The first thing that you need to understand is that the market is in constant battle between buyers and sellers. And what does that mean? So more buyers in the market equals bigger price, which means price is going to go up, and more sellers equals price is going to go down or a smaller price. So if there is more buyers, market is going to go to the upside. If there is more sellers, market is going to go to the downside. And basically, candles are direct reflection of who is dominating in the market. So I'm going to show you exactly right now how we can know who is dominating the market. So what can we know about this candle just by looking at it? We know that price opened it right here. It went all the way to up here. And why do we know this is a strong candle? Because you can see that we only had a small rejection. So what is this wick to the upside? It is basically a rejection. So this candle, the highest point of this candle was this point right here, but it retraced back down all the way to here, which is not a huge rejection, and it is still a strong candlestick. And this indicates to us that buyers have the control of the price, because price is going to the upside, which means there is more buyers in the market than sellers. And then we have another example, which is a bearish candle or a gray candle in my case, and you can see it opened right here, it closed down here, which means price pushed it all the way to this level right here, but it retraced and closed right here, which means there was only a small rejection from the buyers. And this indicates to us that there is more sellers in the market and they are in the control of the market right now. So the market is likely to go to the downside. And there is also this example of the strong candlesticks in the market, which is basically a strong candle without a wick. And what does this mean? This means that market was so powerful that it didn't even reject a little bit. It literally closed at the whole top of the move. So they are strong because they show no resistance from the opposite sides of the market. In this example, no buyer stepped into the market, and in this example, no seller stepped in the market. Also, one very important thing to know is that body size is very important, because if we see a huge body like this to the upside, we know that there is a lot of buyers in the market right now that are pushing market to the upside. And if the body is small like this one right here, we know that there is not a lot of buyers. There is still buyers, but not a lot as here. So the price is more likely not to go to the upside like in this example right here. And that just equals to bigger the body, stronger the candle, and the smaller the body, weaker the candle, and that's it. And now we can move on to another candle, and it is basically rejection candle. And what does this candle say to us? Basically, this candle clearly shows us that market is rejecting and buyers or sellers are regaining control of the market. And wicks basically show that price has rejected a point in the market, and you can see if this example right here, candle with a large wick to the downside, shows a attempt of sellers to push the market to the downside, but in the end buyers regained control and reverse the whole market, because sellers basically try to push market all the way to here, but buyers regained control and pushed the market all the way back to the upside right here. And if we look at the candle this way, we can know that it opened right here because it is color blue, so it opened right here on the bottom. Price pushed all the way to the downside and had a huge rejection all the way to this point. And then what happened? Price even pushed higher all the way to here and basically closed right here. So that means that we had a huge rejection from the buyers, and we closed all the way up here, which is a huge, because reversal is about to happen. And one important thing, color of the candle does not matter on the rejection candle. Why is that? because the wicks tell the whole story. You can basically see that if we wick to the downside, we know that here buyers kicked in and pushed the price all the way up here. It does not matter which color it is, because price was right here, pushed all the way to the downside and basically came back right here, which is always gonna be bullish. And in the other example, if we are going to the downside, color does not matter too, because we are just going to be bearish, because we see the wick, which side the wick pushed market towards to, that side is probably not going to be side we are going to go. So in this example, what you can see right here that we learned just now, it is that when we see a rejection candle like this one, that is literally when we are going to sell the market, and in this example right here, that is literally when we are going to buy the market. But of course we are going to have some confirmation for the entries, which I'm going to show you later on the chart. Because the whole idea is to spot the market actually reversing and catch a whole move and enter on the reversals. Now we are going to go over the weak candle. So basically weak candle tells us that there is literally nobody that is in control of the market right now. So both buyers and sellers are balanced. And basically if you see on the screen right now, you can see that this right here is the body, and it indicates us that basically market did not move quite a lot, and the colors are not important since the market is staying in the same place. And also if we look at the wicks, you can see that we have equally small wicks to the both sides, which means that price tried to go to the upside, it failed, tried to go to the downside and it failed, which means both the body and the wicks are all neutral, and literally price is staying in the same spot, and market doesn't really have somebody who is in control, like both the buyers and sellers are equal. It is basically a state of indecision, like no one is really in control, buyers and sellers are just equal, and basically we can't really trade while the market is making weak candlesticks like this, because nobody is in control of the market. And before I actually show you how to implement this in the live markets, if you want to see my exact model that I use in the markets, click on the video right here above, because I'm not gonna teach you how to use my model in this video, I'm just going to show you how to use the candlesticks that we learned in this video. And if you learned something new till now, make sure to leave a like and subscribe to never miss a new video. And if you want to apply to get mentored by me one-on-one, you can apply through the link in the description, because spots are very limited and also results are guaranteed. Also, nothing in this video is financial advice, always do your own research. Alright, so as you can see on the chart, after we had a sweep of liquidity and a reaction from a higher time frame fair value gap, which I learned you in another video. If you didn't watch it, make sure to watch it, the one that I popped up before this one. I'm also gonna put new one up here. So what do? I'm gonna remove all of this from the chart and I'm gonna put the price back to the liquidity sweep. So after we are ready to enter the market, we use my personal entry model, which is based off of the inverse fair value gap. So if we have a imbalance in the market, that is right here, so you can see there is basically a hole in the market. What do we want to see? We want to see disrespect of that hole, but we want to see it with the three types of candlestick. We want to see it with the strong candlestick. So the first thing we see right now in the market, after this sweep happened right here, you can see that we quite nicely rejected the market right here. It wasn't the most beautiful, the biggest ever rejection candle, but you can still see that we opened the candle right here, went all the way to up here and rejected the market to down here. So that means that market wants to go to the downside, not quite powerfully, but some next candles can prove to us that that is actually the case. And let's see what the next candlestick is. And you can see that the next candlestick is literally a crazy strong move to the downside, which means that market actually wants to go to the downside, because after this little rejection that we had, literally all of the sellers stepped into the market and pushed the price crazy towards the downside. So what do? My strategy is to enter on a close, put my stop loss right here and target whatever we want to the downside. That is not important right now. So let's just see how is the trade playing out, and you can just see it beautifully played out to here and probably a lot more to the downside. So you can see it literally went all the way down there, but that is not important. So this is the first example I'm gonna show you. I'm gonna right now show you some more examples on the chart. Okay, so here we have another example on the chart. So liquidity sweep happened, so let's see the next steps. So basically we are waiting for us to create a nice imbalance in the market, and we actually created two, which is this one right here. Oh, sorry. So this one right here and this one right here. So we are going to wait for both of them to get actually inversed, and we can just do this and connect them together. So let's just wait to see which type of candlesticks we get. So right now we just have a little weak candle right here that didn't really do much, like it was staying in the same place. So let's see what do we get more. So right now you can see that huge rejection candle happened, which means market tried to go to the downside, came to this price area and got rejected hugely by the buyers in the market, which means market is very likely to go to the upside. So let's see the next candle, and the next candle is literally a strong candle to the upside, which is like it is just indicating to us that we need to long the market right now and maybe target something to the upside. So let's just see, will this work out to our favor? And you can see just how beautifully and insanely it goes to the upside. And let's just see, yeah, you can literally target this high right here and you would have gained 6 risk to reward. So let's just go to another example. Alright, so here is another great example on the chart. So of course we have liquidity right here, and you can see that candle that swept it is a huge rejection candle. So you can see a huge wick to the upside, and then after that it went all the way to the downside and closed exactly here. So the first thing we look for is imbalance in the market, as I said, and this is right here the imbalance that we are looking for, and now we are waiting for close. So the close is always going to be as strong as possible is the better. So let's just see what kind of close do we get. So this is really a weak candle, and it kind of rejected towards the upside because the wick is a little bit bigger. Look at the wick and look at the body of the candle. So actually here I would call this candle a little rejection candle. So let's see fewer more candles, and this one actually closed. But the thing that you can see on the chart right now, that this isn't necessarily a rejection candle, but this is a very weak candle because it does not have a direction. So if we enter a trade right here and put our stop loss either like this or somewhere above, it doesn't matter because this is not a good setup. And this setup is either going to be something like this, it is slowly going to go to the downside, or it is just going to fail. And that is literally why candlesticks are so important in the market. So let's just see, does this setup fail or does it work out because of the such a low basically volume candlesticks. So it almost got us stopped out, and it actually ended up taking this liquidity, which hopefully would be break even for us, because if we take out some liquidity to the downside, I would go break even with my stop loss like this, and basically I wouldn't lose money. But you can see right here that it almost had you stopped out, and this was just not good setup overall. So let me show you just one more clean looking setup. Alright, so here's another great looking setup. So we had liquidity sweep right here of this high right here. So the thing that we instantly see is that we have a nice looking rejection candle right here. So that is the thing that we always want to see when entering trades. We want to see market rejecting like this to the upside. So the next thing we want to mark out is fair value gap. And you can see we have a nice little fair value gap right here. So what are we waiting for? We are just waiting for basically this respect. And you can see that market even tried to go to the upside one more time like this, and market totally rejected it and just spiked crazy to the downside. So this is again another strong candle with a very small wick. I can even call this no wick. So this is literally the strongest candle you can get in the market. So all we do is enter the market, stop loss above, and basically target something to the downside. It is not important right here, and let's just wait and see. And you can just see how beautifully it goes all the way to the downside. And this is basically another proof of how important it is to actually read candlesticks in the market. And also, before you leave the video, I'm gonna give you a complete free, I mean like literally free playbook of my whole strategy. All you need to do is go down there in the description. It's gonna be probably a second link. You click on it, you join the server, and you claim this complete free 10-page playbook of my whole strategy. And also guys, if you like the video, make sure to leave a like and subscribe so you never miss a new video. And also, if you are interested in actually getting mentored by me one-on-one, Try to apply down there. Maybe if you're the right fit, you get to be my private student. So I want to see you guys in the next video. Peace.